Well, as promised, we have PETRI REDELINGHUYS with us to give us our daily market update. So good afternoon, PETRI. Thank you so much for joining us. I leave the floor to you.
Good afternoon. And it seems, okay, well, the US is back open and trading, and they're not having a great time. So I'm going to start there. The S&P 500 currently down 0.4%, so just under 0.5%. Dow Jones Industrial Average down 0.75%. The NASDAQ, of course, the tech stocks, positive by 1/3%. Nothing to keep that index down by the look of things. Russell 2000 down by around 1.6%. So it seems that the sort of poor start to the week that we had yesterday is shared by the rest of the world. And it might also be a little bit of that Chinese tech conglomerate crackdown hangover that's happening. China is still upping the ante a little bit on the sort of regulatory changes that they're making now, saying that they're going to impose stricter requirements and oversight on companies, Chinese companies with foreign listings. And that's sending a few shockwaves, I think, through much of the market. As we see, some Tencent linked companies and Chinese tech companies in the US really come under quite a bit of pressure at this stage. And that, obviously affecting us as well. And another interesting thing is yesterday we mentioned that we were looking or waiting for the outcome of the OPEC Plus meeting. That meeting was abandoned. So I'm not 100% sure what that means, but my understanding is that basically they sort of met for a little while and then everybody got up in a huff and left, and there was no conclusion to the meeting and no decision was made. Initially, the response from the oil price was relatively positive, right? So the oil price spiked all the way up to $77.83 on the London exchange per barrel. Now, however, oil price is down by 2%, trading at $75.58 a barrel. So it's just over 2% lower. And I think that's probably driven by the fear that, well, if these guys can't agree, nothing stops anybody from just producing more oil, right? So the expectation, I guess, now is that without any type of agreement from them, there is a risk, that they'll all increase production, and that might have a negative impact on the oil price as more supply comes to market. But truth is, we don't know, right? Any case, looking at local markets, market once again a little bit on the back foot. Top 20 index down around 1/3% at this stage. Resource 20 index down around 0.9%. Industrial 25 index pretty much flat, slightly positive. Financial 15 also pretty much flat to slightly negative. Precious metals and mining index also up 0.9%. And the JSE retailers index down 0.25%. So comparing to the rest of the world, we've already done the US, so we'll just do Europe. The FTSE 100 index down 0.9%, so we're actually outperforming them. German market also, the DAX and the CAC 40 index in France, both down 0.9%. So most of Europe almost 1% lower, and the US seems to be following suit for the most part, at least at this stage. Commodity prices, on the other hand, starting with the precious metals, I suppose, are looking good. Gold price 1.5% higher, trading $1,810.25 a fine ounce. Platinum price also up 0.6% at $1,094.60 a fine ounce. Palladium price also up 1.2% at $2,826 an ounce. So precious metals, it's nice. It's a nice day to be a fan of the shiny rocks, As mentioned, the Brent crude oil price under quite a bit of pressure, 75.55 now in London. West Texas Intermediate crude oil in the US, of course, down only 1% at $74.40. On the currency side, the rand losing a bit of ground. Yesterday, it was surprisingly resilient given the sort of events of the weekend. But also, the US market was closed, so the dollar index wasn't really moving. There wasn't really a whole bunch of interest there. So with US markets open today, dollar index sort of wakes up, and dollar index is up by about 0.25%, which translates into the rand losing around 0.2% versus the dollar, to trade currently at 14 rand 35, about 0.5% weaker versus the euro, to trade currently at 16.98, and about 0.5% weaker versus the pound at around 19 rand 82. And that's it.
PETRI, in just 1.5 minutes, I know we planned on speaking more about it, the oil prices. Saudi Arabia, United Arab Emirates, two major players in OPEC, they fell over plans for the increase of production. Just your take on it and what this will mean going forward with regards to the price of Brent crude.
I don't think that this doesn't necessarily change the base case scenario for higher energy prices that we have, right? Overall, it seems as though there is, well, all right. So I'll give a little bit of opinion, right? The world is coming out of this lockdown, global lockdown situation. It's been, I think it's now been 467 days for South Africa that we've been under some level of lockdown. I mean, that's a mighty, mighty long time. Any case, the rest of the world, including ourselves, I mean, at some point, some semblance of normality is starts to return. We can see, travel numbers are increasing again. People, moving through airports and terminals in the US. We see countries, lifting bans from other countries so that international travel can sort of start taking place again. So it is going to be a slow, gradual sort of resurgence of economic activity, right? It's definitely not going to go back to what it was in 2019 very, very quickly. I think we all know that. It's going to take a long time. What has happened is during that time where there was almost zero travel and very little economic activity, demand for oil and energy fell off a cliff, and we saw prices collapse essentially. That actually removed a lot of production capacity from the market. So even though we have OPEC plus guys all arm wrestling around, who can increase how much by when, the reality of the situation is that if you look at all the other producers outside of the OPEC plus sort of cartel, production capacity has gone offline, and that takes a very, very long time to come back. So there were two things, right? Before COVID, there was a global sort of output shortage that was busy building. This was something that was driving oil prices slightly higher. And it's literally just that there isn't, if we forecast what we think we're going to need from energy and we account for green energy and nuclear energy and all that kind of stuff, the vast majority of it still comes from oil. And, on a global growth sort of assumption, there just wouldn't be enough oil to go around or to sustain low prices for very long, going into the future. Then came COVID, demand fell off a cliff. That killed a lot of the sort of oil producers because they couldn't run at a profit. So they went out of business, literally. And now we have a supply sort of shortage or a production shortage. That is not yet being felt as much as what it could be because we're not running at full capacity on the global economy anywhere. But over the next year or two, potentially even longer, as we recover and travel starts to come back and energy demand starts to rise again, that structural shortage of production isn't going to go away. So yes, even though OPEC might increase production now, in the longer term, we still have a structural shortage of potential production capacity of oil, right? And oil being the main contributor to the energy mix, there's only one way that oil price could go, and that is up. So I'm not 100% sure exactly, how long this takes. These trends play out over a number of years. And I'm not saying that oil is going to go to $1,000 a barrel. I mean, that's pretty ridiculous, but we'll probably see within the next sort of 12 to 36 months, we'll probably see oil closer to $100 than what it is to 70, right? So, we're looking at a region of sort of $90 to $100 within the next 2 years per barrel of oil. So that's the base case expectation or scenario that we're working with on this side.
Petri, we'd like to say thank you so much for joining us, and we will see you again same time, same place tomorrow.
Thank you. Have a great day.
PETRI Redelinghuyys, Herenia Capital Advisors Portfolio Manager, giving us our market updates.